Hello and welcome back. Welcome back to my series on women in private capital. My name is Claudia Zeisberger. I'm a professor at INSEAD, and today it is my pleasure to welcome Anne Kennedy and Gillian Muessig, both of them managing directors at the Masters Fund. Now, I will start off with a one-liner, but then we jump straight away to my wonderful panelists to hear about the mandate of the fund. But Masters is a global venture capital fund investing in the world's highest returning startups. And those are companies with women at the leadership, women at the helm. Did I get this right?
Yes.
Yes.
That's exactly right.
So tell me a little bit, what is Masters Fund's investment mandate? You are here in Singapore right now, talking to investors. You're flying on to the Middle East. Yep. So what would you tell me as a potential investor? What is your mandate?
At Masters Fund, we address a massive market anomaly. Women are getting 2% of conventional venture equity allocations, and they've been doing so since 1946. So if we look at the numbers around conventional venture equity, which is what we mean when we talk about conventional venture capital, right? The numbers as an investor are very interesting. If 2% of capital are going to the women, well, we like to find our unicorns in uncrowded fields. Nobody's looking at the deal, let alone beating us out for the deal, all right? The second thing is that plays out. When women pitch a deck and a man pitches the same deck, the women are offered an average of 16% of the pre-money valuation awarded to a man who will pitch that same deck. As an investor, you just got told that you could get an 84% discount on your initial invested capital based on the human body standing in front of you. Whoa, you have my attention, right?
You have my attention, yes.
Women will raise an average of 44% of the capital that a guy will raise to exit at the same valuation, depending on the industry, give or take. Okay. You just got told 56% less dilution.
So that sounds basically attractive from an investment point of view. And as you said, as an opportunity set, clearly you have no competition or very little competition, I can imagine.
Correct, right. And they are capital efficient. You had a number around women making 2.5 times the revenue
per invested dollar,
yes,
compared to their brothers running companies.
Yes, that's right. So again, 2.5 times the revenue per invested dollar. That's real capital efficiency, right? They exit 1 to 2 years sooner, and time is a risk factor and a cost factor, so we like that too. But the killer number, for about 30 years of data, women at the helm of both public and private markets have been returning an average of 35% higher ROI to their investors. This is not a rounding figure. Wow. That's the anomaly we address.
So that's impressive. And as you rightly said, given that the needle has not moved in terms of percent of dollars invested in ventures going to women, it is an opportunity set that I think we're all surprised that not more investors are pushing for more exposure to female founders or female leaders of young companies.
In 2016, First Round Capital made a report on their 2005 to 2015 fund and reported that the women-led companies in their fund had returned an average of 63% higher ROI. The sort of thing that blows people's heads off, right? I was sure that in 2017, 20% of the money would flow to women, and then 28, no, none of it. Yeah. None of it happened. So it does leave a massive market anomaly. We address that anomaly.
Okay. Now, let's talk in examples, right? Walk us through one of your investments. A little bit of a thinking about why did it work? What would you like to see in terms of startups coming to you? What are you looking for? Where are you along the spectrum? Is it seed? Is it rather round B? So give us a bit of a sense what Masters Fund does.
I think I'm going to talk about Bold Reuse.
Sounds good.
Bold Reuse is a company that manages the sourcing and supply and servicing of reusable containers. You know, we're in a very sustainability focused place here at INSEAD, and this is a growing thing for large entertainment venues, sports stadiums, school districts, that sort of thing. And when we first met them, and I honestly don't remember how, but they happened to be in my hometown of Portland, Oregon. And we first met them, and there were two things that captured my imagination. The first thing was they were able to meet or beat the price of single-use plastic containers for their clients. And I said, okay, that's interesting, because that is an easy sell for marketing. The second thing was they were operating at 70% margins, which is a wonderful idea. And they were operating with a very sort of standard wash facility with stuff going through and deliveries coming in and out. And at that time, I think they had 4 venues in Portland. They are now in 5 cities around the U.S. They're in Phoenix, they're in just going into Chicago, they're in Kansas City, and I've forgotten Seattle, of course, where you are. Yes. And they have just grown by leaps and bounds because they have such a good business model. And also, these 2 women founders have a tremendous amount of what we call grit. We have seen them through some really tough times, and they just keep coming back and coming back and coming back. And now they're beginning to see the benefit of what they're doing.
So one of the things we look for also is that a company must be revenue positive.
Yes.
We do not invest in idea or build stage, but at just the first turn of revenue, somebody's agreed to buy whatever it is you're selling. We have the first product market price fit. At that point, we bring deep leadership advisory to bear. We help them form boards of directors. We take a seat for the duration of our engagement and then get out of their way when a later stage investor takes that investor seat. We teach the CEOs how to shoulder the mantle of being a CEO. The team is turning from the moment of building a product to building a company. And the business of building a business is very different. So we help them, again, form the board of directors, understand how to report to it, how to optimize it, how to even put in place things like time limits on their board director service. So you don't have these uncomfortable conversations because the people you need on your board later are not the people you need on your board today. All of those things come to bear. We look for, again, grit. We look for product in the market, revenue positive. We look for the ability to be to have very large gross margins, right? And the ability to scale. All of those things were in place. Now, what was different about Bold Reuse is that it's a services company. No VC will take a look at such a company. But we have a novel investment instrument which provides our investors an off-ramp. It enables us to get a 3x return from a revenue-based redemption model. So it's a convertible note. But instead of saying this is not redeemable, our convertible note says it is, and this is how. We come in at the first turn of revenue. They exit once it becomes financially stable. They take a small piece of gross revenue month by month until redeemed in full. They are not hit with a bill they cannot afford, and we work with them until they can afford it. That's our risk. A conventional venture debt fund would come in later stage after there's about 2 years worth of revenue. So we're taking earlier risk.
But you're then taking money back.
That's correct.
In regular intervals.
Literally, I mean, I'm going to hand you money, you're going to hand me stock, and the note is the way this goes back, right and forth. So they're going to buy that note back at the end of the game. Now, when they do so at 3x, they're buying it back, they're putting that stock back in their pocket. They've got 2 choices. Go off and become a privately held corporation, they own their company, the investors got off. Everybody's happy. It's good for the investors and it's good for them. But that stock should be worth 6 and 8 and 10 times the amount that they're paying for it rather than 3x. They should be saying, can we do this all day long? And the answer is only to the limit of the stock we have. But the point is that they can re-leverage that stock at a higher valuation and recapitalize the growth of the next stage of the company should they choose to do that. And that's fine. We're trading time for dollars. We're happy to take it back at that standard 3x, and our investors see steady and earlier returns than we would in an ordinary venture capital fund. So we have mitigated risk substantially. We have more of a PE level risk profile. And at the same time, we preserve the upside potential because this is a convertible note. We have the right or the pleasure of the fund can convert that note, right? We will only convert and we will only make follow-on investments, the conventional venture equity investments, when we see a clear path to exit within 3 years. It's got to be 10x or better.
So Bold Reuse will begin redeeming in Q1, in January of 2025. That is barely 24 months after we invested in them. And we thought when we started this that it would take 3 to 5 years. Those were the standard under what everybody understood. Yeah, 5 years. So we said 3 to 5 years. They have to be prepared to return. We have to be able to model out and see that they will return the 3x over 3 to 5 years. All of our companies that are nearing redemption are outperforming that by at least 12 months. And in the case of Bold Reuse, I mean, it's astonishing.
By 36 months.
Yeah.
So in the day and age where we're sitting here in 2024, returning money to investors makes you clearly very popular. I assume you will receive many Christmas cards.
Very popular, indeed, yes. And no surprise, the women are outperforming.
Right. And the other thing I would like to say about Bold Reuse, being a woman and a mom, one of the partners, one of the founders, was 8 months pregnant when we invested. And we didn't even really know. And I went to see her and she said, I should just warn you, I'm about 6 weeks from delivery, before you see what I look like. Because we'd only seen her on Zoom, from here up,
Yes.
had no
This
idea.
was a COVID investment. Yeah. We've actually invested in 2 companies where the women were in their 3rd trimester. So again, that is one of the problems. Many VCs will not take a look. They're concerned.
Very true. So now both of you have been entrepreneurs before this. You've had successful exits. Why start a fund? Why not rest on your laurels and stay on that side?
What part of 2% did you miss?
Okay.
So not on our watch. Truly, we thought it would be better for the next generation. And it is clearly not. Right.
So we've been working together more than 10 years. And in the first couple of years, we thought we would just make a nice little lifestyle business, enable us to travel all over the world. We had spent decades traveling, and the most recent time together on the purposes of explaining what we did in digital marketing, and particularly search engine optimization. Gillian built the world's best-known software company, Moz, and I built the world's largest consortium of digital marketing agencies around the world, and I wrote a book about it too. But we thought we'd do that, and then we'd just go around, and visit all our friends all over the world, and what became abundantly clear was the companies that we were advising, because it's what we love to do. We love working with entrepreneurs, that they would hit this wall after the product development where they could not raise more money. And we said, wait, they need money. And then, of course, the issue about the 2% of the women was, oh my God. So that is what inspired us to
That's true. The market gap. Yeah, the market gap is just as the product is developed, and it's not really sexy to pay for operations and marketing. It was much sexier to pay for the idea if you were an angel investor, and the VCs don't want to come in until they've already seen traction. So that balance right in there, that's the hole. So we could fill that hole.
So you saw the opportunity, you saw there was a gap, and you worked on the solution and figured out how to fill it, and obviously it is working. So at what stage is Masters Fund right now? How much have you deployed? What have you done?
So we have 2 funds. The first fund was launched just before COVID shut the world down. We made 8 investments.
Indeed.
That's right. Okay. 8 investments in the first fund, and those are beginning to return, as Anne is pointing out. But even in Fund 2, Bold Reuse will be returning in 24 months, so that's of its investment date. Fund 2 was launched in 2023. We had our first close by October, end of October of 2023, and we have already begun to deploy. Our deployment process is a novel process as well, so the fund model is novel. The first investment is this revenue-based financing that's about $150,000 US dollars, and we put that over about 30 companies per year for 3 years. That's about 100, not quite, and so on. We work with every single one of them at the board level, leveraging our own LPs as well as our VPs and, of course, the GPs to sit on those boards. Once we have worked with the company, we know the landscape, we know whether the team can take this to the finish line, we know whether somebody else has raised such a large amount that this is now no longer going to be the big scale, opportunity and so on. We have all of that information. At that point, we make a decision for conventional venture equity and the larger investments take place. And again, as I noted, got to be 3 years from the date of that investment that we can see a clear path to a 10x or greater exit. So in that unusual model, we are already at this first portion, and we've made how many investments for the follow-on already?
2 new ones and 2 follow-ons from Fund 1 companies.
There you go. So we're already beginning the follow-on investment process. So we're pretty excited because it's playing out.
So now, you mentioned that Masters Fund is still open for new investors. So if investors want to reach out, we will put the contact down below the video to reach out to you. You are traveling extensively. You said before you're circling the world 3 times this year. So that's a lot of mileage, yes. So, and we'll be very delighted to send hopefully some interested investors to you, but also delighted to send some interesting female founders to you because your mandate is global. Is that correct?
That's correct. And we require 1 dominant female founder in a position of strategic and operational control. Gender diversity is a proxy for the capacity to listen to and to act on diverse ideas, and it does make very powerful teams. As such, we welcome teams that have just 1. It's okay.
But in charge.
Yes.
All of our companies at the moment have a woman CEO.
At the moment, yes.
We find that's tidier.
So it has to be a clear signal that a woman is in a leadership position.
In charge.
Correct.
Yes.
So qualified investors worldwide are being welcomed. We will invest worldwide. We are welcoming investors worldwide. We are particularly welcoming those who may not have engaged in venture capital before because the lower risk profile of the fund, more like a PE profile, will welcome more in such investors. And we strongly believe that if we're going to invest in a broader group of companies and leaders, the money must come from different hands to flow to different hands. As such, you can reach us at gp@masters.vc.
Okay, we will put this below the video. So, Anne, Gillian, thank you very much. Thank you for coming to INSEAD. It is a real pleasure to have you here in Singapore. And the next time we'll have you here, I'll make sure you give a talk to our MBAs. They will certainly be delighted.
It would be our pleasure.
Thank you
so
very
much.
much.